Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us for this segment, we have Shrea. She's a precious metals analyst with the London Stock Exchange. Shrea, it's great to have you with us. Welcome to Trade Talks.
Thank you. It's nice to be here, Jill.
Thank you. And let's take a look at gold prices. How did they perform in the first half of the year?
So they've opened at like $800 and now down to currently $1,728 an ounce. So there's been a lot of volatility in the market because there's a string of factors, right? We had Fed hiking the rates, we had the war, and at the same time, inflation is going up, and now we have the recession concerns. So among that, we saw prices shooting up to $2,069, and now they're again, low to 9 months now. So there's been a lot of volatility in prices, but let's see, with dollar now tipping to 20-year highs, so that is kind of dragging on gold prices at the moment.
How did high prices of the metal impact physical demand?
Well, to be honest, last year we saw a normalization of gold demand. So this year we're going to see slower demand from the previous year because there was a lot of pent-up demand, right? So higher prices also because there's a lot of inflation. So the purchasing power has come down. And also it doesn't help that the major consumption centers like China, where there's COVID lockdown, so that curtailed the demand pretty much on that end. So that is why the physical demand is going to come down from previous year. But ETFs, on the other hand, they've been people were buying aggressively on the ETPs. So yeah, that's how the demand fared.
So Shrea, what is your outlook on gold for the remaining part of the year? Because we have a confluence of geopolitics, raising rate hikes, inflation, the dollar moving higher. I mean, there's a lot of forces at work here.
Yes. So I still think that as the Fed is going to continue the tightening. They've already raised the interest rate 3 times. So I think until and unless the Fed doesn't stop the tightening, the gold is going to be under pressure at least. So we're going to see, coming down to maybe 1650 an ounce. So yeah, the trend is going to be lower for, I think, some time now.
And finally, what will be the impact of the increase in import duty on gold for the Indian market, especially since it's one of the largest consumption centers and importers of refined gold?
So India raised import duty because they wanted to curtail the gold demands as well as the CAD, current account deficit. And because we had a lockdown in 2020 completely, so there were a lot of weddings that were going to happen. They got deferred, and 2021 saw a influx of gold demand. So obviously, we're going to see lower gold year-on-year demand, irrespective of the fact that local gold prices have shooten up. So irrespective of the fact, we are going to we're going to see lower gold demand year-on-year. So yeah.
All right, Shrea, we appreciate the insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Thank you.